Okay, guys, hope you're well. Going to ask Scruff for Casper. Little salute to you. Appreciate everything you do for me on the channel, so I'm happy to answer any question you ask. And as with everything, effort deserves reward. So if I flick this over, a bit of a different question. Curious how it works. When it comes to events like CPI, FOMC, sort of non-farm payrolls, all that sort of thing, I guess. Is the outcome already priced into the market? Do the people who move the markets work every? That's the big debate, isn't it? To everything that I say on the channel is not taken as gospel. It's kind of my own opinion formed over quite a long period of time. I would say a lot of the pricing is built into it. You can often see the market expecting a certain amount of figures. And what will actually happen is you'll see the market go the opposite way. Now, this is kind of a way of faking the market. And it's tricking people to believe that the market is going short when actually they're expecting it to go long. Now, all of those shorts are going to have stops. Those stops are buy orders. So it's a way of inducing the market. Now, that's kind of the very watered way of looking at it. Now, there's certain events they certainly can't price into. We're in a digital age now. Elon Musk can drop a tweet. Donald Trump can drop a tweet. And it can change and move the markets. You can never price for that because it's unknown. It just comes out of the blue. Now, in a situation like that, that's where you've got to know where your pain points are in the market. If it goes wrong, you've got to get out. And that also comes down to how much you're willing to put in the market. So if you're got a small account, make certain you understand if that goes catastrophically wrong, how much it costs. So you can defend yourself against unknowns, but when it comes to the likes of CPI and sort of major news events, there will be an element of it priced in, and then they're just waiting for the key price to press the button and react. But a lot of the time, what you've got to remember is they're not pricing for a 10-minute move. When the big boys are thinking about what they're doing, likewise, with any institution, pension funds, they're thinking months and years, not the next 10 minutes. And a lot of retail traders fall into that trap that they're only looking for 10 minutes. They don't. So that's kind of my answer to that. And it's like everything else. If you know it's coming, just avoid it. Just stay out the way, let the market do what it's doing. And a lot of the time, it'll carry on in the general trend of the market. Hope that helps. Catch you soon.